I think one question that everyone's looking forward to hear from you is, what is in it for the equity and the fixed income investors?
So, I mean, it's fairly volatile, right? I mean, that's what we've seen right across the board.
Yes.
For long-term equity investors, I think my answer wouldn't really change, right? You want to stay invested in a broad, diversified strategy, whether that's flexi-cap, multi-cap, multi-factor. I think those strategies don't change, right? I mean, if you're looking at, if your risk appetite is slightly less, hybrid options like multi-asset allocation, or even balanced advantage funds for that matter, right? So you want to have, what I have always liked or focused on is, you focus on your long-term goals. The budget is, at the end of the day, a single event. Yes, it has massive ramifications, but all those ramifications are generally positive for the economy. And so long as you are participating in the economy for long term, then the strategies that you invest in don't necessarily change. Now, as far as fixed income investors goes, our outlook for both sovereign and high credit bonds remains fairly constructive. Right. So what does that mean? We're expecting growth for FY27, GDP growth to be around 7%. Inflation is relatively muted. So we're very well positioned from an economic and a macro basis, right? So we're not necessarily expecting a significant amount of interest rate cuts from the RBI. So the way you'd want to be invested in is looking at shorter duration strategies, right? And playing those duration strategies in an intelligent manner.
Sure. Very, very insightful, Avi. Thank you for that.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.